Tesla is not slowing down. It only looks that way on the surface. What's actually happening right now is much more important. Tesla is quietly shifting into its next growth phase, and most of the market is missing it. Hi, this is Ken. If you're a Tesla investor or someone seriously watching Tesla's future, this moment really matters, because the way you interpret today's headlines will directly shape how you react to volatility and whether you make emotional decisions or strategic ones. In this video, I'm not going to just repeat the news. I want to help you understand what the market is reacting to, what it's overlooking, and how Tesla's long-term strategy actually fits together. By the end, you should have a much clearer framework to judge Tesla, not based on fear or hype, but on structure, timing, and execution. So, before we go deeper into analysis, let's briefly ground ourselves in what actually happened. Over the past days, Tesla stock has come under pressure. The dominant narrative across financial media has been fairly consistent. First, increased competition in autonomous driving and AI. Second, concerns that Tesla's advantage in FSD may be shrinking. And third, news around the Cybertruck trademark filing being temporarily paused. Put together, the story sounds like this. Tesla faces more competition. Its autonomy lead may be under threat. Even its Robotaxi branding is running into issues. On the surface, that looks messy. And from a short-term market perspective, it's easy to see why sentiment turned cautious. But here's where I want to slow things down. The key question is not whether these headlines are factually true. The real question is whether they describe Tesla's actual position, and in my view, they don't. What the market is reacting to right now is not Tesla's fundamentals. It's reacting to signals, words like competition, AI rivals, and uncertainty. But signals are not outcomes. This is a classic case where short-term narratives are colliding with long-term execution. Let's start with autonomous driving. Yes, competition is increasing. Yes, more companies are talking about autonomy. Yes, AI as a theme is getting louder. But here's the critical point that often gets missed. Autonomous driving is not won by the best AI model alone. It's won by a combination of real-world driving data, iteration speed, hardware integration, and deployment scale. Tesla operates millions of vehicles on public roads across diverse environments every single day. That data advantage is not theoretical, it compounds daily, and more importantly, Tesla doesn't just collect data. It pushes improvements back into real vehicles continuously. Many competitors operate in limited geo-fenced areas. Some rely on simulations, others excel in research, but lack fleet-level deployment. Those are very different games. So when the market says competition is increasing, what it often means is more companies are talking. That's not the same thing as competitive parity. And this brings us to a deeper issue, time horizon, because competition looks very different depending on whether you're looking at the next quarter or the next 5 years. Short-term markets compress time. Everything becomes urgent. Every headline feels decisive. But Tesla doesn't operate on a quarterly innovation cycle. It operates on multi-year infrastructure cycles. This is something Elon Musk himself has hinted at repeatedly, not as bravado, but as a technical reality. Full-scale, generalized autonomous driving is extraordinarily hard, and companies that appear close in demos are often far apart in scalability. From my perspective, Tesla is not fighting today's competition. It's building toward a future state where autonomy is not a feature, but a platform. That distinction changes everything. Now let's talk about Cybertruck. The trademark issue grabbed attention because it's easy to understand. Names feel tangible. They feel like progress or setbacks, but names are superficial. If necessary, a name can be changed in weeks. What cannot be recreated quickly is real-world testing, manufacturing readiness, and operational integration. And that's where Cybercab becomes much more interesting. Cybercab is not just a new vehicle. It represents a shift in how Tesla thinks about transportation itself. Instead of selling a car once, Tesla is positioning vehicles as long-term revenue-generating assets. Assets that operate, assets that update, assets that generate value over time. That requires three things: autonomy that scales, manufacturing that supports it, and software that ties everything together. Trademark headlines don't tell you anything about that progress. Fleet testing does, and Cybercab is already moving in that direction. To really understand why this matters, we need to zoom out even further, because Cybercab doesn't stand alone. It connects directly to how Tesla is reshaping its broader business model. For years, Tesla was valued primarily as a car company, then as an EV company, then as an AI company. But the next phase is different. Tesla is evolving into a mobility platform. That means cars are no longer endpoints, they are nodes. Nodes in a system that combines autonomy, energy, software, and usage-based economics. Once you view Tesla through that lens, many recent decisions start to make more sense, including what's happening in China. In China, Tesla updated the Model Y interior, black headliner, larger display, incremental refinements. At first glance, these look like small changes, but what's more interesting is what Tesla did not do. It did not slash prices. Instead, it offered more accessible financing. That's a subtle but important shift. Why would Tesla prioritize financing over discounts? Because Tesla is starting to think beyond simple unit sales. When a vehicle has future autonomy potential, the purchase price is only part of the equation. What matters more is utilization, uptime, longevity, software support, and financing becomes a strategic tool, not to move inventory, but to seed a future operating fleet. From that perspective, China's Model Y strategy doesn't look defensive. It looks preparatory. It looks like Tesla is quietly aligning today's sales with tomorrow's platform. So at this point, we have two very different stories. The market sees falling stock prices, rising competition, and branding issues. Tesla, on the other hand, is executing on autonomy, fleet readiness, and business model transition. This gap between perception and execution is where most investor confusion comes from. And in the second half of this video, we're going to dig into that gap even deeper, including one unexpected insight that almost no one is talking about, and what all of this really means if you're investing in Tesla for the long term. Here's the part that I think almost no one is talking about. While the market is focused on competition and short-term fear, Tesla has already crossed a critical threshold. Tesla no longer needs to prove autonomy works. It needs to operationalize it. That's a very different phase. Most companies are still trying to demonstrate that autonomy is possible. Tesla is already figuring out how autonomy fits into manufacturing, financing, regulation, and long-term asset utilization. This is why recent developments feel confusing, because when a company shifts from proof of concept to system building, progress becomes quieter, less flashy, more structural, and ironically, easier for the market to misunderstand. Once you recognize that shift, Tesla's recent moves start to connect in a very different way. So let's talk about where this is likely heading. Over the next few years, Tesla's story will not be about one product launch or one feature update. It will be about integration. Autonomy integrated into vehicles, vehicles integrated into networks, networks integrated into real economic activity. Cybercab is not just about robotaxis, it's about redefining how transportation generates value. Instead of selling cars into a saturated market, Tesla is positioning itself to operate mobility infrastructure, and that has massive implications. The market struggles with this kind of transition because it doesn't fit clean valuation models. Is Tesla a car company, a software company, an AI company, a transportation platform? The answer is increasingly all of the above. And markets don't like ambiguity. They prefer simple narratives. That's why short-term volatility increases during strategic transitions. But long-term value is often created inside that confusion. This brings us to the most important question for investors. If you're watching Tesla every day, it's easy to feel pulled in two directions. On one side, you see headlines, red candles, and uncertainty. On the other, you see steady execution, testing, and structural alignment. The key decision is not whether Tesla will be volatile. It will be. The real decision is what time horizon you're investing on. Long-term investing is uncomfortable by nature because it requires you to sit through periods where progress is invisible, where the market is impatient, where narratives lag reality. Tesla is currently in one of those periods, not because it's failing, but because it's transitioning from selling products to operating platforms, from optimizing vehicles to optimizing systems. That kind of shift rarely looks clean in the moment, but historically, those are the moments that matter most. So let's bring everything together. Tesla is not slowing down. FSD competition is louder, but not yet structurally equal. Cybercab branding issues are superficial, not fundamental. China's strategy reflects preparation, not desperation. What looks like instability is actually reconfiguration. Tesla is moving from a phase where success is measured in units sold to one where success is measured in utilization, scale, and network effects. That transition is messy, but it's also where long-term value is built. So the question I'll leave you with is simple. When you look at Tesla today, what are you really looking at? Today's stock price or tomorrow's system? Markets will always react to the present, but investors who understand the future tend to be rewarded over time. If this analysis helped you see Tesla from a different angle, feel free to like the video. And if you want calm, long-term focused Tesla analysis like this on a regular basis, consider subscribing. I share insights like this consistently, always with a long-term investor mindset. Thank you for watching, and as always, enjoy life with Tesla. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.